And our next speaker has already been on stage today. It's, again, Radoslav Albrecht from BitBond, and his topic will be tokenization of securities, assets, and real estate. Stage is yours, Radoslav.
Thank you very much. It's a pleasure to be here again and to talk a bit more about tokenization. In this talk, I'm going to show, first of all, which asset classes can be tokenized from a financial security standpoint, and which components on a technical and infrastructure level are necessary for that. We just need to change the slide deck and then we can get started. While we pull it up, I'll already introduce myself. So I'm Radoslav Albrecht. I'm the founder and CEO of BitBond. And at BitBond, we focus on providing tokenization technology primarily to banks and regulated financial institutions, but also larger corporate issuers, for example, that want to utilize tokenization to go to the public capital markets, for example, in a tokenized form. And in that, we work with several clients, from smaller banks to larger banks, and yeah, some of them also direct issuers that utilize our technology. And on the other hand, we also consult banks because banks typically don't simply go and select tech vendors, but typically these are technological transformation projects and they need support 1 or 2 steps before they start to select tech vendors. And we do that as well because we have gained a lot of experience with prior transactions already. These are some landmark tokenization transactions. To give you a few examples, what we already see in the space of securities tokenization. Probably the one that is best known in the market so far is the bond of European Investment Bank that was issued in 2021, 100 million euro tokenized bond that was issued on Ethereum. Other landmark transactions, one was Vonovia, for example, a German DAX company, one of the largest German corporates, that issued a tokenized bond where we provided the technology for it. So on these transactions, we can see that there's already a viable market. At the same time, we believe that there is a huge growth potential still. Of course, everybody who's here at the conference is familiar with the cryptocurrency markets. Depending on which day you look at it and where the prices are, we're currently talking about a total market size of the cryptocurrency and crypto assets market of around about $2 to $2.5 trillion, which is big because it has grown a lot over the past years. However, if you compare that to traditional financial markets, and even if you just look at public capital markets, it's actually tiny. We're looking at, again, depending on which day you measure it, around about $230 trillion, around about 100 times the size of the cryptocurrency market. On top of that, so on top of publicly listed and traded bonds and equities, you have private market assets such as fund shares, derivatives, private equity, VC, real estate, and many other asset classes. All of these asset classes benefit from tokenization due to the added efficiency that you have in the settlement process. So we think long-term, the entire volume of traditional financial assets are going to be tokenized, but of course, it's not going to happen overnight. However, the development is already there. If you look at adoption among asset managers, so which are probably some of the accounts that manage the highest assets under management in the financial markets. Most of them already look to invest into crypto assets in the short term, meaning that they are already active, or they plan to do that within the next 2 years. And this is a strong signal that crypto assets, and this includes both cryptocurrencies as well as tokenized financial securities, are going to be in the portfolios of some of the largest asset managers in the world. And this is driven by efficiency gains. As I stated, settlement efficiency is one of the main topic of tokenization, and this is also one of the main reasons why asset managers and in general financial firms are curious about tokenization and want to utilize it. Now, where does this efficiency come from? We often like to compare the efficiency gains of tokenization to the switch from physical, paper-based communication to email. Today, it's nearly impossible to imagine a world without email or without electronic communication in general. However, 20, 25, 30 years ago, sending an email was a pretty cumbersome process. You needed to buy a computer. Most likely you didn't have one at home. You needed to somehow get connected to the internet, which also wasn't the most convenient thing to do. So you probably many times said, well, why do I need to set myself up with this email technology? I can simply send a letter the way I used to do that for the last 50 or whatever years. But then, of course, email at some point became so widespread and other forms of electronic communication that today it's hard to imagine how it was living without that. I think a similar comparison applies to tokens and tokens as a means to represent ownership in an asset. The settlement process, especially that we have in financial securities today, pretty much resembles a paper-based process. The central securities depositories, they in some cases actually still store physical paper-based certificates. And even if we have electronic securities in our securities account with our bank, again, the settlement process in the background is almost the same as if it was paper-based. And only if we turn it into tokens and we completely remove CSDs and we remove paper certificates, then we have a world that resembles what we have already in communication, which is different protocols and different options to communicate in real time. Because tokens, obviously, you can send in real time at near zero costs around the world. This is a more technical depiction of the settlement process. On the left-hand side is the legacy settlement process, how a security is transferred, for example, from an issuer to the investor. There are several intermediaries involved, such as the securities account of the investor, the CSD. In Europe, this would typically be Clearstream or Euroclear, and you would normally have a paying agent. If you bring that process into the tokenized world, all you have is the investor and the issuer, and the token can go directly from the hands or from the wallet of the issuer to the wallet of the investor. And if you even have an on-chain payment method, such as a stable coin or at some point in the future a central bank digital currency, then all of that process happens on-chain. And this means you can create a so-called instant delivery versus payment mechanism, which removes counterparty risk from the transaction. You save costs, which means that you can reduce denominations. You can make assets available to retail investors that previously were only accessible to institutional investors. With that, you can increase secondary market liquidity. So these are some of the motivations and some of the gains that you have from tokenization. In order to do that, you need certain technologies, and at BitBond we deliver one part of the technology stack that is needed. And relating to tokenization, we deliver the entire stack. We have three components. One we call the investor user interface. The second one is called the offering manager, and the third one is called token tool. With the investor UI, it's a white label user interface that some of our customers use if they don't have an own user interface in order to onboard investors. In the offering manager, you manage the investors, you manage their KYC, you manage orders, you can build the order book. So this is something that you would normally do, for example, in a book building process in an IPO or in a bond offering. And Token Tool is our product which allows you to create, distribute, and manage tokens on so-called EVM chains, on chains that are compatible with Ethereum. Currently, we support Ethereum, Avalanche, Polygon, and Binance Smart Chain. Now, if you look at the value chain of a securities offering, and specifically of a tokenized securities offering, then you have the subscription phase, you have the settlement after the origination happened, then you have custody for investors, you have secondary trading, and you have further lifecycle events such as coupon payments, dividend payments, repayments, voting in the case of equities. And so all of these steps need to be supported by infrastructure. In some cases, you still utilize legacy infrastructure for that, but in many cases, such as in the offering management and the tokenization and the custody and the lifecycle management, you need new technical components in order to do that. And here we have 8 components that you need in order to conduct a tokenized transaction. And for the remainder of the presentation, I want to go very briefly through each of these components to show how they can look like. The first thing that you need is you need legal documentation. And at least under German law, right now there is around about 3 options how to approach a security token offering. You can do a registered bond, you can do a bearer bond under the relatively new Electronic Securities Act, or you can do a private placement. In general, the documentation that you have is not much different from a traditional security or a traditional asset, but you would typically specify the settlement system as not being through a CSD, for example, but you would utilize a specific blockchain, and this is what you would mention. Then you need something to run the book building process. You could do this with a spreadsheet. If you have a handful of investors, then you can do that manually, or you can utilize software for that, which you would typically do when you have dozens or hundreds or even thousands of investors. And this is where the offering manager that I mentioned previously would come into place. Then you need to select a blockchain, a protocol for the issuance. This is a big topic on its own. We could probably talk for 2 hours easily about the different characteristics of different protocols, what are their advantages and disadvantages. These 4 protocols are probably the ones that are used the most right now in the context of security token offerings. I know there's plenty of other protocols. I personally believe that going forward we'll have protocols that are slightly more use case specific, and probably Ethereum will remain one of the few protocols and blockchains that will have a very general purpose approach. Ethereum currently still has a couple of weaknesses in its scalability. That is why scalability solutions such as Polygon or Avalanche came up, which are currently very prominent. It remains to be seen whether they continue to be as prominent when Ethereum switches to the so-called consensus layer or Ethereum 2.0, which solves some of the scalability issues that Ethereum has got. And Stellar, which is not an EVM chain, not an Ethereum-compatible chain, has also been utilized quite a lot due to its very high efficiency and highly tailored approach for tokenization. So in a transaction, you would typically need to select one of these. Then you need a custody solution as the issuer. The issuer issues tokens from an issuing account, and you need to control the private key of that account because you want to make sure that you can control the token even after the primary issuance. There are several options for that. 3 examples are given here. Typically, you, especially in an institutional setting, you would want to have a multi-sig setup, meaning that you would want to make sure that there is not one single person that can control the issuer account, and that there is no one single point of failure. So you would typically have multi-sig options. Credo is one custody technology provider which is compatible to MetaMask Institutional, which is a great way to set up a MPC technology, multi-party computation, in combination with a Web3 wallet such as MetaMask. You can do the same with Gnosis Safe and MetaMask. Gnosis Safe is a EVM-compatible multi-sig solution. These first 2 are more of a pilot and MVP style approach. They typically don't fulfill the requirements of banks, for example, in custody. This is where we would go to a solution like Fireblocks or some of its competitors, which provide, I would say, bank-grade IT security, transaction approval policies, backup and disaster recovery, and several other factors. Fireblocks, for example, also supports Wallet Connect. The reason to support Wallet Connect or MetaMask is so attractive because then you can use something like Token Tool that we deliver, which is a Web3 application. To those of you who have already dealt with custody solutions, typically custody solutions have different APIs. So if you go to Fireblocks or to Metacode, they have different APIs. Integrating with them is a relatively complicated technological process. However, when they support Web3 technologies such as MetaMask or Wallet Connect, then all of a sudden you can have a tokenization solution that is compatible to a big number of custody solutions. And this is exactly what TokenTool is. TokenTool is our solution for managing tokens on EVM chains. And TokenTool is a Web3 application. If you can see it on the top right, you can see this little MetaMask logo, which means that you can log in with any Web3 wallet. And if we go quickly back here, you can use Credo, you can use Gnosis Save, you can use Fireblocks, and you can simply go to TokenTool and log in there, create new tokens, manage the tokens that you already have, and distribute them. And with this, we make tokenization much more accessible to a very broad range of established custody solutions. Then, of course, you also need custody on the investor side. So I was currently speaking about custody from the issuer perspective. The investors also need custody. Good news is that there's plenty of custodians that already support a broad range of protocols. And you can choose between what we would call crypto-native custodians, such as Finoa or Tangeny, for example, in the German market, or banks and you know, the large, very well-known custodians in this world that have already started to set up digital asset custody solutions as well. One other big topic in tokenization is payment settlement. The landmark transactions that I showed at the beginning of the presentation have all been settled in fiat. However, the vision is, of course, that at some point, tokenization transactions will be settled in a digital euro and a digital dollar. Of course, there's already big stablecoins out there, but from an institutional standpoint, when institutional investors are participating in these transactions, typically they cannot cope for compliance reasons with the counterparty risk that these stablecoins pose. So either they are waiting for a real CBDC to be issued by central banks, or stablecoins that are issued by commercial banks. We're not there yet, but there is a first few commercial banks that started to issue digital euros. Bankhaus-Vonderheit is one of them, and some of these are actually utilized in these transactions. But right now, it's rather the exception than the rule. And then finally, and this is the last point in the infrastructure setup of a tokenized transaction, is secondary trading. Also for secondary trading, there are several options. Currently, the Central Securities Depository Regulation prevents regulated securities exchanges from listing tokenized securities because they are not centrally deposited, which is the purpose of tokenized securities. So the regulation still needs to catch up here with the reality. What you can do today is you can trade OTC over the counter, or you can wait for the pilot regime to kick in, which is a European Commission initiative to make exemptions to the CSDR. Some of the exchanges that are in the market are already trying to take advantage of that and are trying to find ways to actually list and trade tokenized securities. There's a Stuttgart Digital Exchange, SDX by Six Group, and Luxembourg Stock Exchange are some of these. And this is it. These are the 8 main components that you need when you think about a tokenized securities issuance in an institutional context. I hope I could give you a bit of an overview here, what's needed. And I don't know if we have time for 1 or 2 questions. If yes, now is the time. Otherwise, maybe after the talk. Thank you so much.